Welcome to today's presentation. Today we have Miss Sabrina Davis from Fulton Bank going over financing your business ventures. If I can make sure that everyone stays on mute, and this will be recorded. You will get a copy of the recording once it has been edited, and for your viewing pleasure. So today, Miss Sabrina Davis.
All right. Thank you so much. Good morning, everybody. And it's such an exciting moment for you to join us. And we wanted to thank you for your time and your dedication to your business, whether you're looking to start a business or you're looking to take it to the next level, and understanding some different options on financing and what is out there. So let me formally introduce myself. I am actually the Vice President of Fulton Bank, and I've been a financial advisor for small businesses and personal financial options for clients for over 24 years. And, you know, at Fulton Bank, our value statement guides everything that we do. And my commitment is to treat my clients the way I would want to be treated, by listening and fully understanding their pain points before even recommending a solution. And providing the right solution is so critical to address both short and long term when you have your financial needs. And I'm very, very passionate and dedicated to being your trusted advisor. So I want to say thank you again for joining this morning. And, you know, when there are different banks out there in our bail team, the bail team really represents the bank, the accountant, the insurance, and the lawyer. So the bail team, stands for an acronym, and the B stands for the bank or the credit union. The A stands for the accountant or CPA. The I is for insurance, and the L is for your attorney or the lawyer. And those are all really critical roles of people and partnerships to help partner with you with the success of your business. And when I think of the B, which is the bank and the or credit union, as a critical role, you know, you want to get out and really interview the right bank for you, the right credit union for you. And at the end of the day, banks and credit unions are not the same. We all have different business models, and it doesn't make them a bad bank or a credit union. You know, that's bad. What that just typically means is you want to understand what products and services that bank or credit union is offering and make sure it's the right fit for you, right? So there's nothing more frustrating than to be and to have your relationship with a bank for many, many years, and at the end of the day, they can't even help you but have a checking account for you. So if you need borrowing or lending, or you need a loan, you need working capital, you're looking to buy equipment, whatever your project is that you're looking to expand your business or even just start up your business, you know, having the first step in place, and that's finding the right bank or credit union, is really critical. And I'll tell you, that's why the Women's Business Center at ODU invites Fulton Bank to the table, which I am very passionate in teaching. I'm only here because I want to make sure that people are learning things that they might not know. I feel like knowledge is power, but I want to take it a step further and tell you that, you know, applied knowledge is even more powerful. So as I go through this presentation to help you understand different techniques for financing your business venture and what the banks look for or look at, hopefully that will take some of the frustration off your plate to help you understand better what resources are out there, what strategies are out there. And as I'm talking about interviewing your bank, and as I'd mentioned before and started to say, you know, you're going to need interview questions, helping you understand what questions that you could possibly ask the banks and or credit unions, depending on who you choose to interview, and help you understand what those questions are that you're going to need. And as I go through the roster, it looks like we have 10 so far in the meeting, and I want to say thank you again for being here today, volunteering and spending time, and hope that you are able to get something from the presentation, as I feel like time is very valuable, and I do value your time to be here. So thank you so much. I typically try to do a round table on understanding who's on the call, so I can better hone in on some options out there for you as I look through the roster. And it looks like we are probably around 11 people so far on the call. So, and they're continuing to join. So instead of doing a round table, I think what I'm going to do is go ahead and get started telling you a little bit about Fulton Bank. So as I had mentioned, I love the Women's Business Center and what they stand for, and the quality and the experience that they're able to help with knowledge for business owners and entrepreneurs, whether you're thinking about opening a business or you're taking it to the next level. So, you know, Fulton Bank is very user-friendly. So please add Fulton Bank into one of the banks that you're going to be interviewing. We are a medium-sized bank. We're quite large. You can't tell in the state of Virginia because we have less than 1% market share. However, we are in 5 states: Pennsylvania, Delaware, New Jersey, Maryland, and Virginia. So when you're thinking about those banks that you're getting ready to interview, one of the things that I would highly recommend is to interview a small bank, interview a medium-sized bank. Fulton Bank fits that model for a medium-sized bank. And interview a large bank, and then maybe throw in a credit union. What you're going to find is a lot of different experiences as you're going through that interview process. And the most important thing that you want to keep in the back of your mind is you're looking for the right product. You're looking for the right relationship. This is not a dictatorship. And just because the bank is around the corner is convenient for you, you might find that it possibly and might not necessarily be the right bank for you. Convenience is really understanding technology and understanding the options to be able to do your banking when it comes to for small businesses. And as we go through this presentation, I'm going to be throwing out a few commercials talking about what Fulton Bank offers, not because I'm trying to sell you something, only to try to give you a sense of understanding of what different options are out there. So as you're interviewing different banks or even throwing in a credit union, you have a better understanding of maybe some ideas and examples of products that are out there. For instance, Fulton Bank does not charge a minimum balance requirement or a monthly maintenance fee for the business accounts that we offer for our clients. So if you want a budgeting technique or a budgeting type of product available out there. For instance, let's say you're a landscaping company and you accept merchant services, which is payments from your clients using a debit card or a credit card. That's merchant services, right? You offer also payroll. You've got several employees and you offer payroll with your company. And then let's say, you know, you really want to have the basic, which is having an operating account set up as well. So I have just mentioned 3 options to have different checking accounts. So you have, in this situation, you have one for your operating and expenses, you have one for payroll, and then you have one for merchant services, right? So that's just a budgeting technique. But if you bank with someone or a bank or institution that charges you for every single account you have, difficult to put that practice or that option in place. So trust me, please get out there, interview the right bank, the right credit union for you. So then once you find the bank with the right options for products and services that fit your business model and your business, then it's important to find the right banker. You know, we all have different experiences. Interview your banker. Help understand you know, what their experience is, how long they've been a banker, what other volunteering efforts that they do. You know, as an example, I have been a financial advisor for over 24 years. I specialize in small business, helping them with the right strategy and coming up to the table. I roll up my sleeves. You feel like I am your partner. We sit down side by side, roll up our sleeves together, and figure out how do we get you from A to B when it comes to finances. And I also have a few of the bail team that I like working with, or I can let you know that you might want to interview in your bail as well. So, and then we might even come up with a strategy where we're using a different bank product or service, but that keeps you from leaving me, right? So I work with other different banks to help find the right solution for you. Because if Fulton didn't perhaps have the product, which in most cases other banks come to me and then we can help and work together, then I want you to stay with me as your financial advisor, your trusted advisor. So how do I keep you with me? My mentality for Sabrina Davis is that, you know what, I have the risk of losing you as my client. So I do everything and I go above and beyond to make sure I understand everything that's out there and make sure I understand all of your options as much as possible so we can come up with the right strategy. And that way you stay with me. So that's the questions in the interviewing that you're looking for when you're trying to interview your right trusted advisor, your financial advisor. And as I mentioned before, you know, ask them what their value statement is. If they don't even know what a value statement, and you heard mine, knowing that I like to treat my clients the way that I want to be treated and recommend solutions only after I have heard the full story and understanding what your short and long-term goals might be and being very passionate and dedicated, you know, to being your trusted advisor. So that is the reason why I volunteer my time. And I get out there and I volunteer for the Veterans Business Outreach Center, the Women's Business Center, the economic development of each city, the small business development centers, and I am teaching this material along with credit scores and business credit scores because, you know, the top 3 reasons why some businesses fail, in my opinion, over doing this for 24 years as a financial advisor is because the lack of knowledge. You just don't know what you don't know. Congratulations. You are here on this presentation to help you understand some things that you really need to know or you might want to know that will help you with your decision of either starting a business or taking it to the next level. So, you know, kudos to you. Continue doing the seminars. Continue looking for that education to help you grow as a business or even start as a business. And the second reason is lack of capital. You just don't have a lot of cash in your pocket. So therefore, that's why we're doing the presentation today of financing your business venture. And then third is lack of planning. So if you fail to plan, you plan to fail. So one of the things that I highly recommend is putting a business plan in motion for your business, whether you've already started or you're getting ready to start. One of the most critical components, I believe, in the success of a business, at the end of the day, the business plan is really your roadmap. It helps you to get from plan A to plan B and have a strategy and focus in on those steps to be able to be successful as a business. And if you're not really thinking about those things in advance, are you really going to be able to get to point B? So roadmaps, as you know, are like you are getting in your car and you're going to go to California. Well, how do you do that? Are you just going to get in your car, pack, and just get in the car and hope that you make it to California without making any plans? Absolutely not. You're probably going to use a GPS or you're going to have flight plans to fly wherever you're going. You're going to understand what time it takes to be there and how long you are flying, whether you have a layover, or maybe you use a map. Maybe you stop and gather additional information on directions as you're, using your GPS or your map, just to make sure you're heading in the right direction. That to me is your business plan. It is quite simply, how do you get from point A to point B in your business, and how do you make it successful? So therefore, if you don't have a business plan, I feel like you're really planning to fail. So as you are understanding the different resources through this conversation that we're having, and I take you on this journey that we're getting ready to go together on, understanding what the banks think, how to get those things together to be prepared for financing if you're looking for a loan. And in some cases, a business plan is required on some products that if you need a loan, whether you're a startup business or you're just not generating enough revenue, you've got to tell the story to the bank. And the business plan is basically the best way to be able to do that. So those are, in my opinion, the top 3 reasons why, if a business fails, usually the reason why. So number 1, lack of knowledge, right? Number 2 is lack of capital. The reason you're here today. How do I get a loan? How can I have more funds to be able to start up my business? Or I need working capital for my existing business, or I'm just trying to buy a business or a building. And number 3 is lack of planning. So please write that down, top 3 reasons. And the other, you want to interview your bail team, as we talked about before, and this is just a repetitive conversation as we now have 19 people have joined our seminar and presentation today. So just to recap for those who missed, the bail team is the BAIL. B is your bank accountant, your bank or your credit union. The A is the accountant or your CPA. The I is insurance, and L is your lawyer. And as I am here representing the banks and the credit unions and talking about different options, all banks are not the same. We all have different business models. Our credit unions are not the same. It doesn't make us bad. It doesn't make us challenging or anything like that. You just have to get out and find the right bank and or credit union for you. So with having said that, you can see the screen here, financing your business venture, and we're going to go ahead and get started with the presentation.
Most young companies need money, which may or may not come as a big surprise, but they do. The number one source they get money from is from their own savings. Whether it's a few $100s or even thousands of dollars, that's what we tend to tap first. And a lot of companies don't get money from any other place. They get money from their own savings, and then after that, they're lucky enough to be cash flow positive. They're profitable. So we talk a lot as if all companies require all sorts of external capital, and the reality is that more than half of young companies get all their funding from a combination of founder savings and then cash flow from the business, and we're out of here. Next up on the list is another one that catches, I think, people by surprise, and that's credit cards. Almost every young company you can think of, to one degree or another, was funded on credit cards. And it is the single largest source of capital for young companies after founder savings. And then the next place where they tend to get money is from friends and family. After I've tapped out my credit card and I've used up all my savings, I turn to people I know and say, hey, will you help me? And that's the third biggest source of capital. And then the next place is banks. And the banks are a totally weird situation because with banks, they get a lot of attention, but they actually fund very, very few young companies. But it's not their fault. You have to think about the way bank lending works and how shareholders want banks to lend. They want them to lend money against secured assets. And young companies don't have any security. They have nothing to secure it against. And the joke in the industry is you can get all the bank funding you want as a startup as long as you don't need it. And then the last piece is venture capitalists. They get the lion's share of the attention, which in some ways is warranted. You know, your Googles and Apples and FedExes and many others all have venture capital money inside of them. But the reality is, and this is from Kaufman Research, less than 20% of the fastest growing companies in the United States took any venture money. And that's not because the VCs wouldn't give it to them. It's because they didn't want it or didn't need it, because they had all those other sources. I don't need money, and I certainly don't need money on these terms. Because, venture capitalists, unlike banks, they don't lend against secured assets. They give you money in exchange for shares. So they take some of your company away. So my answer is if you don't need it, definitely don't get it. There's no question the venture industry has become staid. The irony is it's intended to fund disruption, and yet it's an industry that had become complacent. And interestingly, over the last 5 or 6 years, we've seen the emergence of other mechanisms for funding, like AngelList, like these kinds of peer-to-peer funding sources, as people increasingly provide capital in smaller amounts, but more people doing it directly. Having said all of that, though, venture capitalists are hugely important for those young companies that don't have access to bank money, but are growth companies. They have the prospect of being a $5 million or a $10 million company in a couple of years, and they need that growth capital to get there quickly. So it's a race. And the way you play the race is by getting money from people like venture capitalists who give you the money so you can compete with other people who are racing as fast as you are. If you can run a company off cash flow and some combination of credit card, your own savings, and friends and family, Bob's your uncle. Run. Keep all the equity, because there's no better thing than being in full control of your own destiny.
So that is a very short presentation talking about some different options out there as far as ways to look at the difference between debt financing and equity financing. And the couple things that we're going to talk a little bit more on is why very few banks out there will finance young companies. And we'll talk about that a little bit more. And that includes credit unions. If you can find the credit union that actually does lending for businesses. Most of them don't, and of course it doesn't make them a bad credit union. It's just they're not in that business, and would highly recommend, interviewing and finding the right bank for you that is in that business for helping fund young companies or startups or companies that have not generated a lot of revenue and you still need funds. And that's why the Women's Business Center has Fulton Bank as a representative, because we do. Whether you have your relationship with us or you're a young company or startup or you're even advanced, we take care of the entire gamut. And we're really a one-stop shop, and we just try to custom fit the right product or service for you to help you with your business. So they were talking about the difference between, do you want a bank or do you want an investor? Some companies might want an investor instead of having to go to the bank and get a loan, or their credit union to get a loan. So we're going to talk through the differences between the two. Of course, debt financing versus equity and investor. So debt financing is basically, of course, you're doing a bank loan or a credit union loan. It allows you to maintain the ownership and control. You don't have to have a percentage of your business that you are giving to the investor in order to get the funds to be able to invest in your company. Requires repayment with interest. Basically, a loan or a line of credit, you have a payment, you pay it back, and then it's either available for future use if it's a line of credit, or if it's a loan, it's fixed rate, fixed payment, it's gone at the end of the term. It is, meaning the bank loans or credit union loans, that is generally considered the cheapest way to grow. Typically, if you're looking for an investor to invest in your business, it's more expensive for your company to be able to do that, or your business to do that. So what is equity investing? So if you're having challenges with having or finding a bank loan or a credit union loan, or you don't have the working capital that you need or money that you need to put down in order to get a loan, which is in some cases 20 or 30%, then you may want to consider an investor. Well, what is the investor and the pros and cons? So basically, an investor for your business, of course, generally involves investors. Money is exchanged for partial ownership. So typically, the money is never just paid back. What that means is they own a percent of your business. They're never going to go away. So the working capital, the generated revenue and sales that you have, they're going to get a percentage of it, and it's never paid back. They are there for as long as you have the business. Having investor also means that you have shareholders, and they can have huge benefits beyond the money. In some cases, they can be mentors. So things you want to ask yourself as you're trying to figure out, do you want to have an investor, or are you wanting to get a bank loan? So questions you want to ask yourself is, how much money do I need? How much control do I want? What is my bargaining position? And what type of collateral or capital is most appropriate? Not all funding sources are equal. You know, when it comes to what's my bargaining position, we're going to talk a little bit more about that as we are going through. So let's go to the next slide. So external funding, what does that mean? That means like bank loans or credit union loans. You are in control. And these are some things that you want to keep in consideration. Whether you're doing a bank loan or you are an investor, you're really wanting an investor for your business. So things that you need to know, basically you'll need to have skin in the game. Even with a bank loan, typically, even if we're going small business administration loans, you're going to want at least have 10% in your pocket of that project. So let's say your funding project is $100,000. You need some working capital, you need some payroll for about 12 months, and let's say your project in itself to get up and running or to expand your business, you need $100,000. So basically what's going to happen is the bank is going to require you to have a minimum of 10% in that option to do a bank loan. So what does that look like? Basically, you're going to ingest 10% of your own money, which is $10,000, and you're going to do a bank loan for the other $90,000. We're going to ask you to put in your $10,000 up front first. Then we start doing disbursements of the other $90,000 based on whatever resources that you're using, like for instance, invoices, receipts, or we give you draws up front. So things that you need to know. So how can you get that minimum of 10%? The other thing is, if you're looking for an investor, the investor is going to want you to have a certain amount of skin in the game as well. You might have a great product or service, but typically they are asking you to have money up front. So ways that you can attain that skin in the game, or money that you have to have down or up front, you can do it through your own cash or savings. Sometimes you have equity in your home that can free up the additional cash that you can put in your business. You also have friends and family. Basically, you may ask for a friend's help or family, whether it's investing or loaning you money. Be careful in this particular situation, as friends and family still have a contract. You want to have it a legal binding agreement. And the only way by doing that is by contract. You may love your family, you may love your friends, but this is business. Keep it business. Make a contract. I promise you, you will be happy at the end of the day that you've done that. I have seen over the 24 years of being a financial advisor so many ways that has gone wrong for friends and family. When you're dealing with home equity lines of credit, let me give you an example. Right now, we have a home equity line of credit that is up to 80% loan to value and no closing costs. And it's interest-only payments. You're looking at prime plus 0, which is 3.5 to 3 1/4. And it's a line of credit, so you can draw on it as you need it, or it can sit there just in case you have emergencies. So that can actually serve as helping you free up some funds to be able to help you with your skin in the game. Credit cards. Let's take a minute and talk about credit cards. Credit cards were never meant for long-term financing. Let me repeat that. Credit cards were never meant for long-term financing. They are only meant for a short-term solution. So credit cards can be a great resource. And let me give you an example. Right now, Fulton Bank has a 15-month, no interest, no annual fee, business and personal credit card. And that can help you with some supplies or even some options to be able to get business started or bridge a gap that might be giving you challenges to be able to get a business loan, because you can be a startup business or an existing business and it's no documentation required. They don't require you to show proof that you're generating a lot of revenue in order to get the business credit card or the personal credit card. So that is a great example of how a business credit card can work. But if you have that same $100,000 project that I had mentioned before, and you're trying to go all around town, rack up $100,000 in credit card debt, that is not short term, and that is not how credit cards were ever meant to be used. They are the only way to use a business or a personal credit card is to keep in mind you want it for short-term financing. If you don't have a strategy for paying off that credit card within 3 years, then don't. And just because you can does not mean you should. So having said that, get with your bank or credit union, your banker or financial advisor, and come up with a strategy before you pull any triggers of financing your business. Again, I give you these commercials of examples of what Fulton Bank offers to give you an idea of what's out there. At the end of the presentation, I will have my contact information that you can reach me, and I'll have that hopefully in the chat. If not, I'll just bring up a document real quick to show you how to contact me if any of those things are of interest for you and your business. Or you just want to reach out and interview Fulton Bank, reach out to me, and we can do a customized fit, a interview, whether that's in person or over the phone. I am located in Virginia Beach and would be happy to help. But at the end of the day, whether you choose Fulton Bank or not, please make sure that you're interviewing. For me, I am just here to help. So, and that is really my passion. So if you want to reach out to me and we just have a strategy conversation, maybe you're not in Virginia, maybe you're in a different area, please, by all means, I am here to help in any way that I can. So going down this list, you've got equity and stock portfolio and retirement accounts. Those are all resources that you can use for your skin in the game. Please make sure that if you're using stock portfolios or retirement accounts, that you have reached out to your financial advisor to find out if there's any other options. That should be your last option, because retirement accounts are really meant for retirement. They're not meant for you to tap into. And then if you do have to tap into it, what is your fallback for you and your family for retirement? You've worked hard for that. Please keep that in consideration as you move forward trying to find your funding resources. Debt financing. So let's review. I'm going to take you on this journey of helping you understand what debt financing options are out there. What does a bank or a credit union think when you're applying for a loan, a credit card, a lease, business, personal, any kind of lending at all? What are the things that we're looking at? And here's your cheat sheet. So basically, you've got the 8 C's, what I call the 8 C's rule of credit, right? So, and let me bring up each one of these C's and see if I can't help dissect what these 8 C's are. So as you can see here, this is really talking about your conditions, character, collateral, capacity, capital, cash flow, commitment, and credit. Let's talk about each one of these C's. Conditions. The bank wants to know what outside circumstances that may impact the borrower's ability to repay for a loan. At the end of the day, think about it. The banks just want to know, or the credit unions just want to know, how do we get our money back, right? How do we make sure that we get the funds back if we were to give you the loan? So we're looking for economic trends. You know, when I think of economic trends, a great example is your COVID. We're dealing with COVID-19. Who would have ever thought? The challenges that we're facing with the industry, especially restaurants, face-to-face, different businesses. And with that being the case, what are you able to do to overcome those challenges right now? You know, some companies have decided to go internet-based or outside resources to serve their clients, like, for instance, outside seating for restaurants. So those are different ideas of what we're looking at when your business is looking for a loan. We're asking you all of these questions to help us understand, do we really need to do this loan or do we not need to do this loan? Is the maturity of the industry a long time, or is it just a startup industry that has not been proven? For instance, if you're a landscaper, obviously there has been things that are shown for the industry that's proven. Landscapers, restaurants, you know, they've been in business for a while, but what is the maturity of the industry? Can you speak to that? What's your local market conditions? Can you speak to the barriers of the entry? What's your competition? What's the experience of this particular industry? Character is your next C. Character. What does really character mean? And I want you to think of character as a resume. Not, hey, I'm looking for a job, here's my resume. Character is just simply being able to understand who you are and relate that to the bank. So what is your existing relationship with the bank? It is not a deal breaker for you not to have the relationship with the bank. For instance, you can still, like if you don't bank with Fulton Bank, you can still come and ask us for a loan. But if you have a relationship with us, in some cases, it might help tell the story better. we know who you are, we trust you, we see how you do your banking, we see how your business runs, and it might help us get over the hump if we were thinking that, we're really not too sure about this business. So that's why it's important for you to get out and interview your banks before you make the decision for a long-term commitment when that bank may or may not be able to help you. But what is your experience in the business? Have you run a company before? Those are questions you want to ask yourself. Even when it comes to experience, you can talk to the education. You can help us understand what that looks like, all of the above. Collateral. In some cases, you might be asked for collateral. And different types of collateral for a business loan can be equipment, vehicles, government contracts. In some cases, if you have cash value in your insurance, of course, you can offer cash or CDs, certificate of deposit. And most people use real estate, whether it's personal real estate or whether it's business real estate. Capital and liquidity, a borrower's cash position. That's what capital and liquidity talks about. Typically, you remember, you're going to have skin in the game, which is up to 10 to 20%. So how much are you going to be investing in your business? If you don't have money to invest in the business, maybe you want to go small business administration, SBA loans, or maybe a lease, or maybe if it's short-term financing, we can find a credit card for a solution. How much money do you have left over after the transaction? We want to know that you have at least some funds in an account. So in case you cannot open your doors, for instance, who would have thought COVID was going to shut your door at this point? Do you have reserves in an account in order to pay the payment for the loan just in case something negatively impacts your business? And then how long do you want to stay in business in order to do that? So those are cash reserves that we're looking to see if you have or you don't have, a conversation that we're looking to have. Capacity. What is the capacity to pay the loan? So typically that might be in the form of a tax return that shows you're generating enough sales and generating enough revenue in order to pay the loan back. Those are things that we're looking for. Let's say you don't have tax returns to prove that. Then you may want to go an SBA loan that does not require tax returns. What we're looking for is a business plan that's looking for projections up to 3 years that you're taking your best guess at what that will be. And maybe you want to do a business plan SBA loan instead because you don't have business tax returns to show proof that you can pay it back. Or maybe you do have business tax returns, but they still are not strong enough to show you can pay that loan back. Then you'll want to do a small business administration SBA loan that does not require tax returns to show proof that it's paid back, that you can pay it back. We're looking for a business plan to show projections of you taking your best guess of helping the bank understand how you're going to pay that loan back. Cash flow. What is the rule of thumb for savings for unexpected expenses? We really want to see that you have some funds in an account for a backup in case you have an unexpected expense for your business. However, this is just a want you to know. It's not a requirement from the bank, but the most successful businesses, all their fixed and variable expenses, monthly times 12 is typically the rule of thumb for a successful business to be able to have funds. And you can actually have those unexpected emergency funds by cash sitting in an account. You can have it by a credit card. It's there in case you have an unexpected expense or a business line of credit. It's something that is short term that you can gain and access funds in case you have an emergency. Personal credit score and business credit score. Last week for the Business Women's Center, I did a presentation on the difference differences between your personal credit score and your business credit score, and would highly, highly, highly recommend that next month you will be able to sign up for that class. So having said that, the Women's Business Center is having this class once a month, as well as the difference between your personal credit and your business credit score every month. So please go on the website and don't forget to sign up on that particular class. And I know that a lot of people on this meeting and this presentation today are ones that were in the class from last week. So thank you for joining me today. Please understand, your personal credit score is just as critical as your business credit score in order to do a business loan. Remember, I had mentioned the banks just want to know they want to get their money back. Well, if you are only signing as the business and your business were to fail, the bank will not get the money back. That's why there is a personal guarantee that's usually 99.9% required by banks and credit unions that you sign as well, that if the bank were to fail, we're still going to get our business back and you have to still pay us back. And that's where the personal guarantor comes from. And that's why we pull your personal credit and your business credit. Let's stop for a second and articulate what is a business credit score, what is a personal credit score. To the bank, it's our way of understanding, can we trust you? Can we trust that you're going to pay us back the loan? And that's simply, in a nutshell, what a business credit score or personal credit score is about. Can we trust the consumer in order to pay us back? So back to where we were on the 8 C's and the 8C rule, that takes us back to our original presentation and really dissects the differences between what a bank and a credit union is looking for and takes you on that journey of when you're sitting in front of the bank or having a conversation, those are all the things that we're thinking about. Those are all the pieces to the puzzle that we're keeping in consideration in order to approve you or decline a loan request. So let's go down this list on the right-hand side where it talks about personal credit cards. We talked again about how important maybe having a personal credit card or business credit card might be. A different concept of thinking of how and when to use the business credit card. Keep in consideration things that I have mentioned. It's never meant for long-term financing. If you want long-term financing for your business, and that's more than 2 or 3 years, you really should do a business loan, fixed rate, fixed payment, and not a line of credit. In some cases, you could use a line of credit or a business credit card to get started, and let's say at the end of the day, you've got $20,000, that's how much you needed, but you didn't need to draw off of it from the beginning. You were going to draw from it for months. You didn't need all of it at one time, and you can use that as a bridging technique in order to gain the idea of exactly how much your loan is going to be. So then let's say 2 years have gone by, your balance on your business credit card is $20,000. Now it's time to do a loan. Fixed rate, fixed payment, pay off that business credit card, leave it available for unexpected emergencies, and you've got a strategy to pay that business loan off. That is another great opportunity to when you should be using or could use a business credit card as an option. Business lines of credit. That is a line of credit that is unsecured or maybe secured using business assets that is just sitting there in case you have an emergency or you have a project that you're trying to do. Business line of credit is monitored by the bank and the credit unions. They're going to look at it every year. They want to see that it's paid off to zero at least one time for that year, even if you take and pay it off and you're using it, you take it and pay it off, you use it again 2 or 3 times throughout that year, that is really the purpose of a business line of credit. It's not to have a $50,000 balance on it for 2, 3, 4 years. Again, lines of credit and credit cards are not meant for long-term financing, and the bank wants to know that you're using it that way. So when it comes to business lines of credit, you've had $50,000 balance on it for about 3 years or 1 year or 2 years, and you haven't really paid it down to zero or paid it down at all, we're going to then want you to take that, pay it off, and put it on a business loan and require it. In some cases, that's the situation. If not, at least it's a conversation to start by saying, tell me about this line of credit. It never really was meant for you to keep a balance on forever. Should we do a loan? And that's the conversation that your financial advisor or your banker should be having with you. Let's talk about term bank loans. At the end of the day, it is quite simply a fixed rate with a fixed payment, and at the end of the loan cycle, it is paid off to zero. And that's what a business loan is. SBA guaranteed bank loans. What is an SBA guaranteed bank loan? Basically, remember those 8 C's we just reviewed? Let's say the personal credit is a little challenged. You don't have 20% to put in the project, and maybe the industry is not proven, or you really haven't run a business before. That's where the bank would probably come back and decline it. Well, how can we turn that into an approval? Basically, what SBA is a government-backed loan, and they're coming to the bank and saying, okay, we will take on the risk if you approve this loan for this client.
Sabrina, you're muted.
Can you hear me now?
Yes, ma'am.
Okay, I'm not sure how I got muted.
And just let everyone know, I am looking at all the questions, and at the end of the presentation, we will be getting those answered for you, okay? All right, go ahead. I'm sorry, Sabrina, go ahead.
That's okay. Thank you for letting me know. So just to review an SBA guaranteed bank loan, if the bank is not willing to approve the loan, and some of those C's of the 8 C's rule is challenged, we will reach out to the government to back up your loan as a guarantee up to 75% in order to turn it into an approval. You cannot go to Small Business Administration or SBA in order to get the loan. You have to find a bank that does the loan that can do SBA loans. So that should be one of your interview questions. Does your bank do SBA loans? Not all banks do, and very few banks are doing SBA loans right now because of the PPP applications that are out there. And today, Fulton Bank actually moved forward with the PP application for the second round. So a lot of those challenges are going on with the banks, and they're focusing on different aspects and not doing SBA lending. Well, Fulton Bank is one bank that is doing SBA lending, and we're happy to help if you need SBA in order to back your loan. Then there is premier SBA lenders for banks, and that just means that the government has given the bank basically a rubber stamp to say, you know what you're doing, you know how to do it. It's a faster process, easier process, and we are considering you a premier bank, and you've done lending with us. And Fulton Bank, again, is a premier lender for SBA, and if you do not have tax returns at all, or you have tax returns that are challenged and cannot show that it can pay the loan back by itself, then SBA is the direction you want to be able to go to. So then there's two different types or several different types of SBA lending. I'm going to give you two. One, there's 504 SBA loan. A 504 SBA loan is if you're looking to purchase a building. If you're on this call and you're looking to purchase a building, that's another question you're going to need to ask. First of all, you're going to have to find a bank that does SBA lending. And then you're going to have to ask and interview them, do you do 504? I'm looking to do a purchase on a building. There are a few banks out there that do that. Fulton Bank is one that does 504s. So then there's 7A. That's everyone else on the call that's not looking to buy a building. You're going to need to ask for 7A SBA loan. And some banks do and some banks don't do SBA. I'm going to give you an example. Town Bank does not do 7A. They do 504. And again, it doesn't make them a bad bank. It's just they're not in that business model. So you're going to have to do your interview and research and find out the right bank for you. Well, Fulton Bank does all SBA loans. We also have veteran incentive programs for SBA loans, and that's why we are considered very user-friendly with startup businesses or young businesses, or even, take it to advanced businesses that are looking for additional funding. We do it all. So then there's microloans or leases. Remember I had mentioned you have to have 10% skin in the game? Well, if you're looking to do a lease, which is equipment financing, what that loan looks like is they will do 100% financing. You don't need 10%. So that product is out there. Fulton Bank does that as well. And then there's microloans, which is basically a smaller loan. There's not many microloan options or resources out there because of the COVID-19. They're limiting the risk right now, so a lot of those institutions are not doing them anymore. If you're looking for a smaller loan, you may want to consider maybe an option for financing with a business credit card to bridge that gap for a smaller amount, and then have a strategy. Like, for instance, we have the business credit card that's 15 months, no interest, no annual fee right now, and you can be a startup business. So that's just another example of what's out there. So this is where we get into the investor part of it. We don't spend a whole lot of time because I'm not an investor. I am going to give you some homework. If you are interested in having an investor for your business, these are some things that you want to think about. These are the different types of investors. There's crowdfunding, there's angel investor, venture capital, private equity. Basically, you want to really understand how much control you want of your business. If an investor is something that you want to consider, they're going to own part of your business. You're going to give them a percentage of ownership of your business, and you will need to be able to give them a certain return, and they will be able to give you a certain amount upfront cash in order to start your business or take it to the next level or help you with your project. So let's talk about crowdfunding. That's basically where you're putting your information on the internet and you're trying to get some investors to invest in your business. It's a newer form of financing, and in its early stages. It's not regulated. You will be able to trade cash for ownership in your company versus BIA or through crowdfunding. These are three different types of crowdfunding: Indiegogo.com, Fundvet.com, Kickstarter.com. So you can do your homework and understand if this is the right resource for you. You can actually cast a wider net. I mean, think about it, the internet. You can really reach out to a lot of investors that are looking to invest in companies, small companies, or even startups in some cases, to take you to the level to where they can earn money from. The con in doing this is it's not regulated. If you are putting your information, your business plan on the internet, to cast a wider net in order to get investors. Be careful, they can steal your business plan or your idea. The next one is an angel investor. So you can find, as an example, angellist.com or other search engines for angel investors. Basically, they're a mentor for your business. They're going to want a percentage of the business. They want a high rate of return. They want to get in and get out, and hopes that they start their return on their investment quickly. They typically will come in and mentor you maybe for the first 3 months up to 6 months, because they want to make sure the money they're giving you is put to good use. They will sit side by side, answer any questions that you have. They're not going to run your business for you, but they're going to make sure the business is running in the positive direction, because they want to make sure that they're getting their rate of return. They will expect a very strong return in a relatively short period of time. But this is where the mentorship comes in. They, a lot of times, have run a business before. If they're interested in yours, of the same industry, they've proven themselves. They know that it's a great concept. They like your product or service, and they can help you, and they're willing to get you off the ground floor in order to make your business successful. Now, keep in consideration, they're never going to go away. You're going to have to pay them a percentage of your company forever. So you want to keep that in consideration. It's not like a loan. Once you've paid back the money they give you, they go away. No, they're going to want you to pay them a certain percentage of your generated revenue and sales forever, as long as you have this business. Venture capitalist, Shark Tank. I'm sure most of you are familiar with that TV show Shark Tank. That is a venture capitalist. It's the panel that sits in front of you. They're asking you questions. They specialize in that industry. They've done it before. They're looking to give you funds with a high rate of return. They, in some cases, will sit there with you as a mentor as well, but basically that's a venture capitalist. They're well established. They're looking for high growth companies, high rate of returns on their investment. So most of the time they're looking for well established companies, and they're looking to take their business model to the next step. When you're listening to Shark Tank, typically they've already proven. They've proven to the panel that they've been out there, they've been selling the product or offering the service. They just need a little bit of money to take it to the next level. That's really what a venture capitalist is looking to do. So the key takeaways for this particular presentation: plan for your future growth. You need to know how much control you want, understand how much control you need, and make sure you have a business plan is a must. So whether you're looking for a bank loan, for SBA loan, you need a business plan. It's required. If you're looking for an investor, they're going to require a business plan as well. And remember, the top 3 reasons why most businesses, if they fail, the reason why, one of those top reasons is they fail to plan. So if you fail to plan, you plan to fail. So in my opinion, over the 24 years of being a financial advisor, one of the most critical parts to anybody's success as a business is to do a business plan. There are resources out there to help you do a business plan. You can reach out to me, the Women's Business Center, or Fulton Bank, and I'm going to give you my contact information to help you understand what resources are out there to see different options for a business plan. And let me bring up this information. This is my contact information. I so much appreciate your time, and this is where we're going to go ahead and move forward with asking questions. I wanted to give enough time for that. And I cannot see.
I have them. I'll read them out.
Okay, okay, very good. And
right.
if you want to stay on, and the questions are really great because as I'm answering these questions, it might help you think through of something you didn't think about. So thank you to all that have asked a question, and I appreciate your time and being able to do that. Tasha, thank you so much for your time to be able to help me look and see what those questions are.
You're very welcome. I'm going to go ahead and start with the questions. Hold on. First of all, let me go ahead and let everyone know. I want to thank you all for showing up today for our presentation with Ms. Sabrina Davis with Fulton Bank. And we have gotten a lot of information from her, and she's shared a lot. This meeting has been and will be recorded. We will have these sessions monthly. Our next one will be with Sabrina. I have so many on my calendar. Our next one will be
I think it's going to be February 10th, right?
like I said, it's a lot on my calendar, so it's like I'm scrolling.
It's okay. So February 10th is talking about the credit, the difference between the business and the personal credit. And then we're going to have another resource day on February 16th. And if you'll go in and sign up, that's going to be a repeat of this information that we're doing today. If you missed any information, you can come to that particular presentation, because I don't know how many times over the 24 years and the times that I've been volunteering time to do the presentations, that every time you're listening to the presentation, you're really taking something new away from it, and it really helps you to bring home some things that maybe you overlooked or you want to repeat the information again. And Tasha, I'm going to turn it back to you again, because I just wanted to just take up a little time so you can get that.
Yeah, I'm still looking. I don't. It may not be published just yet. However,
okay.
I'm going to put our Eventbrite page. So if you can make sure you sign up on, well, you've already signed up on Eventbrite, but that's our Eventbrite page. We do have several events going on as well. A few actually going on next week as I speak. So let's go ahead and get to the questions. You ready? All right. Tiffany House had written, the first one says Operation Payroll and what? Tiffany, I'm going to allow you to unmute yourself. Can you unmute yourself and ask your question? I'm not sure exactly in what context that question was referring to.
Hello, thank you for allowing me to unmute and speak. Earlier I think it was in the first 30 minutes, she was saying that we would need different checking accounts, and one was for operating expenses, payroll, and it was one more.
Yep, so payroll, operating expenses, and merchant services. If you're receiving payments through credit cards or debit cards for your product or service, you probably want to have a separate account for those. And, you know, it's a different way to budget. I'm so glad you asked this question, because, you know, when we're budgeting on a personal level, a lot of times entrepreneurs don't think about the budgeting for the business level as well. So it breaks out, your CPA is going to love it. It's going to break out your payroll to a separate account, separate monitoring. It's going to break out your merchant services, receiving payments for your clients as an accounting, and then your operating expenses. You know, you're just everyday, day in and day out expenses. And therefore, if there is ever a fraudulent event and your account is ever compromised, you've got one of them that we probably are going to have to shut down, and you've got the other two that continues to move forward and continue running, so until we get the other one back up and running again. So, you know, on a personal level, I'm going to give you an example of what I do as a financial advisor. I have an account for Christmas, I have an account for car expenses. I have an account for bill pay, paying my bills. I have an account for my grandchildren. And I plan for those expenses instead of have to borrow for them. So those are different ideas of being able to budget and have different accounts for your business. I was giving you an example of the personal ones, and that's an example of the business on those three. But it's important that you find a bank that doesn't charge you minimum balances and things like that in order to use that concept, because that way you can plan for the expense, plan for being able to monitor and figure out what's going on. If you're a real estate business, you have several rental properties. You might want an account for each rental property so you can keep the expenses separate. If you're dealing with a rental type business plan. So thank you for that question.
All right, and the next question again, it's with Tiffany House, is what does bargaining position mean?
Your bargaining position means that how strong are you going to be able to tell the story? Have you run a business before? What type of industry experience do you have? Your bargaining position means how can you convince the bank in order to be able to approve the loan? Do you have your 10% skin in the game ready? Do you have your unexpected expense funds account ready? What's your bargaining position? And then also, when it comes to investors, you want to have a really spot-on, articulate business plan. What is it going to take for that investor to invest in your business? What is your bargaining position? Is it a percentage of the business that's going to be your bargaining position? Is it shown, proven history of what you've been able to sell so far? What is your bargaining position? Great question. Thank you for asking that.
All right, next one is Tan Taylor. Her question is, what is the max you can get on your credit card?
So it's going to be different answers for that question, but I'm going to just articulate Fulton Bank because I'm just assuming, as the commercials that I put out there as examples of products and services. So again, the business credit card, we go up to $35,000, no interest on 15 months, no annual fee, and it's a great bridging technique, whether you're needing to do a business loan eventually, but you don't need all the money up front, or you just need a small amount and don't need to really ask for a large amount. But we go up to $35,000. Great question.
All right. Tiffany House has a question in regards to the slides. Will the slides be available after? I know we're recording this, but will the slides be available after this the presentation?
So I don't think that Deborah or you like, for instance, sometimes they'll send the slides out in advance. But I think in this particular situation, the best thing to do is to either reach out to me. You've got my contact information up on the screen now, and I can send you the information that you need, or come to the next seminar.
Okay, and we can see about sending them out earlier.
Yeah.
Next question is, if you're a startup company, how do you build business credit? Great question. That's
a great question. So here's where I'm going to give you a little bit of homework to do. That is a good hour and a half information, and that's going to be February 10th. So if you'll join that next class, sign up for that when it's up and going for Eventbrite. I promise you, it will be well worth your time.
Yes. All right. Next question is, we already got the contact information for you on the slide with the contact information. Next question is, Tan again, are the SBA loans through at Fulton Bank? Excuse me.
Yes. Yeah, we are a premier lender for SBA loans, and we do all of them. And if you go on the SBA website, there is a list of premier banks and banks that actually offer SBA loans. You'll see Fulton Bank on there, and you'll see Angela Wojcinski as the first contact, and you'll see my name as the second contact. I actually specialize in those types of loans.
Next question is, do you have resources for grants?
So your resources for being able to find out what grants are out there is your economic of each development of each city. I would encourage you to reach out to those cities. Our grant program that we are doing, we have two of them. We have one for veteran-owned businesses, and then the other one is if you are a first-time home buyer and you haven't bought a home in 3 years, that you're in a first-time home buying, we have a different grant program. We will pay up to $3,500 in the closing costs. So those are the two grant programs that we have that we're trying to, we have in place to help with our communities and be able to help with some of those resources. If you are looking for grant programs for buying a home, please reach out to me because we have a department. Her name is Marion Uzzle. She specifically coaches one-on-one on the grant programs out there for if you're looking to purchase a mortgage. Great question.
And Miriam is great. I've known her for years.
Oh yeah, she's awesome.
All right, the next question from Tiffany is, at what stage do you need a lawyer?
So that's a really great question. They're all great questions. I mean, what a great participant questionnaire that you have going on, Tanya. But when you think about your bail team, you want to have that up front. The bank or the credit union, that's the B. A, accountant, CPA, I is insurance, L is lawyer or CPA. They're different types of lawyers and attorneys. There are small business ones that charge a lot less. There are a la carte, which is customized for any particular type of solution that you're looking for your business. Then there's what we call a monthly fee to have a CPA on call at your fingertips in case you have something. You can reach out to them and they just charge you what, $200, $100 a month, but they're able to help you at any time. So the answer to that is yesterday, sooner rather than later. Because the last thing you want to be doing is trying to interview for the right attorney or lawyer if or when the time comes that you need them. Interview now, figure out which one you want, understand the different business models out there for lawyers and attorneys, hone in on what you decide you want to do, because if you have an emergency or something that's come up, last thing you want to do is be frustrated and trying to understand who you want that to be. Great question. Thank you.
All right, the next question is, are you able to assist in getting a D&B number? Duns and Bradstreet.
So the class that I do on February 10th, I show you exactly on how to do that. If you need that information beforehand, just reach out to me. My email address, which is unfortunately not on the screen, is
I'll put it in the chat.
Okay, perfect. So Tanya's going to put the email address in the chat room, so you can just email me and I can send you that information. But again, if you're looking for Dun & Bradstreet information, business credit score, please come to the class on February 10th. I promise you it will be so worth your time. But if you need that information before and you can't make the February 10th, reach out to me, because at the end of the day, the most important thing to me is that I can help you and at least point you in the right direction. even if you don't choose Fulton Bank. So thank you so much. Thanks for the question.
Okay. And the last question was, it doesn't have your email on the slide, and I've gone ahead and addressed that. So if anyone has a question, please raise your hand for me, and I will allow you to ask the question. No questions? Comments? Smart remarks? You're all on mute. I can't hear you. I think Tan was trying to say something.
Your feedback is really important.
So much. That was a lot of information. I really appreciate it.
Thank you for the feedback.
Thank you. All right. Well, ladies and gentlemen, everyone is saying thank you. You're very welcome. All right. And again, this will be recorded. Everyone will, I have to edit the other ones. And hold on, where can I find details about the webinar? The webinar details, right now, we have to get it activated in Eventbrite. And as long as you have the notifications in Eventbrite, you'll get that, as well as long as you're on our mailing list, the constant contact information will notify you as well. So I will make sure that our office does send that information out as soon as possible so that registration can begin. You're very welcome. I'm still trying to read the questions and comments, but I appreciate everyone for showing up today. And thank you all. Have a wonderful week. Stay healthy and strong. And I'll see you all next time.
Thanks, Tasha. I appreciate your time too.
You're welcome. All righty.